me show y'all how I set up my framework for the day. We want to start out on the daily time frame, right? And we want to mark out this inefficiency, this fair value gap right here on the daily time frame. You know what I'm saying? We are anticipating price to fill this inefficiency right here. But first, as I frame my day, I want to mark out the previous day high and the previous day low. Remember, these are daily candles. When you're setting out your framework, that's where you want to start. Previous day high. We'll put this in the middle. Previous day low. Now, the reason why I mark out these levels is because there are orders sitting on top and below. So what we look for is for price to take out this previous day high to either continue or to either reverse. If it was for the downside, if price would have took out this previous day low, we want to see if it wants to continue or if it wants to reverse from these levels. So now that I mark those off, let's scale down to the 1 hour time frame and set up the framework of what time we need to start entering the trade. So the first vertical line is going to be at 3 a.m. I'm going to mark that as a black candle. This is the beginning of the London session. So the second vertical line is going to be at 8 a.m. This is going to be pre-New York session. This is when we want to get ready to start trading. The second vertical red line is going to be where we want to stop trading. Once price reaches this vertical line at 12 p.m. lunchtime, we don't want to trade. We're not looking for opportunities. We're only looking for opportunities in between these two red lines. And I'm going to put one last candle for the end of the day. So this is our framework. You see, price hasn't reached New York session. It's currently 1 a.m. It's about to be London session. Price is going to get very volatile, or it may consolidate. But we don't want to trade until we get in between these two candles, preferably at 10 a.m. So now I got my framework for the day. I want to start marking out my PD arrays. Here goes another inefficiency, another gap. You see how these two candles, their wicks do not meet. They don't meet. You see how like these two candles right here, they overlap. These right here have a gap. It's an inefficiency. Price needs to fill this fair value gap. This is on the hourly time frame. But remember, we're anticipating price to reach the daily fair value gap. So we're anticipating price to come down here during London session. And during New York session, we anticipate it to come up here throughout the day. So this is the move we're anticipating. When we're trading, we should only be but we should only be trying to enter the market once or twice. If it doesn't pan out from what I'm anticipating here, we should sit out for the day.